Markets this morning are fractionally higher. Take a look. It follows Pfizer's FDA's approval yesterday. Dow Industrial's up about 20 points right now. S&P 500 up 5 3/4, and the Nasdaq higher by 47. We are looking ahead to some economic data this morning. We'll get durable goods orders and the GDP following the manufacturing data we saw yesterday. The Federal Reserve virtually meeting for the Jackson Hole Symposium this Thursday, and Fed Chair Jay Powell is set to speak on Friday morning. Joining me right now is Mainstay Capital Management CEO and Chief Investment Strategist David Kudla. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and former Trump and George W. Bush State Department Senior Advisor Christian Whiten with us this morning. Great to have everybody this morning. Thank you so much for being here. David, kicking things off with you. We are in a big week. The week has arrived. Jackson Hole happening Thursday and Friday. What are you looking for as we see economic concerns going into this meeting now? Are we pulling back our expectations of growth, and what are you expecting out of the Fed?
Well, it's interesting the path that the Fed's been on just over the past week. We had the Fed meeting minutes released on Wednesday of last week, and there was concern because of the talk of tapering in those minutes. Fed presidents came out later in the week to say that the tapering might be delayed or could be delayed further. So I think there's a lot of people waiting to see what we'll hear out of Jackson Hole this week. But we believe that all the taper talk is premature, and that it will be at the end of this year or into next year before they're even close to tapering. And when you look at what's happened with the Delta variant, the resurgence in COVID, we have growth somewhat rolling over here, or at least we expect a slower rate of growth going forward, and that's being impacted by the Delta variant even more. We think that the Fed is not going to taper, and we think that, if anything, we'll have a dovish communication from Jerome Powell at Jackson Hole, and that we continue to see the markets continue to do well on those dovish comments and lower interest rates.
Yeah, it's David. It's interesting because we were sort of reading through the lines when we spoke with Robert Kaplan the other day. The president of the Dallas Federal Reserve joined me on Friday, and just his comments suggested to me that maybe there was a rethinking of the tapering, maybe not so soon after the fall begins in October, which was a lot of the expectations. Come October, we start pulling back that money. But listen to Robert Kaplan with me on Friday. It fits more in with what you just said than the prior estimate. Watch this.
But the thing that I'm going to be watching very carefully over the next month before the next meeting is it having a more material impact on slowing demand and slowing GDP growth. And so I'm going to keep an open mind on that. And if it is having a more negative effect, that might cause me to adjust my views somewhat from ones that I've stated.
So there you go. There's a lot of looking at potentially adjusting the views as the Delta variant is causing concerns within the economy. I know you like the medical technology space right now, David. How do you want to allocate money as we look at an economy that is still growing, but perhaps not as strong as we expected earlier this year, and perhaps the taper now begins next year rather than later this year?
Yeah, I think that when we look at where we've been this year with both cyclicals and value, as well as the growth stocks doing well, but almost a maddening rotation between those two different styles within the markets. We think that going forward here, we don't want to look towards, I'd say, an all-out COVID play, but more of a growth-oriented over value and cyclicals, because we think value and cyclicals will struggle a bit through here. And as you mentioned, we like areas like healthcare, which is a defensive sector, specifically the medical technology devices. But healthcare is a defensive sector that can help us on those days where we see the market struggling and some of our growthier stocks struggling on those days, healthcare doing well as a defensive sector. So we're tilted towards growth, with defensives in there for diversification, a little bit downside protection, specifically healthcare.
David, let's end on what's happening in Washington this morning. We've got the House back in session. Nancy Pelosi is pushing for her membership to actually push forward the $3.5 trillion in spending as a priority before the $1 trillion infrastructure plan. What's your take now in terms of all of this spending? Do you think this plan gets blown up as a result of what's taking place in Afghanistan? And how would markets react to that?
Yeah, I think that, we have been really on a historic, unprecedented amount of monetary stimulus, which is mostly affecting the markets, but fiscal stimulus as well. And these fiscal stimulus packages that are still coming will certainly have a positive impact on the markets, but diminishing so in terms of how they're rolled out. So as we monitor what's happening in Afghanistan, as we monitor what's happening in Congress, and how they shift between, or where we see them coming down on these fiscal stimulus packages, it matters to the markets. But we also have that massive monetary policy that continues. $101 billion of new monetary stimulus coming in the week before, bringing the balance sheet to $8.34 trillion.
Yeah, there's certainly a lot of free money out there. David, it's good to see you this morning. Thanks so much.
Thank you.